We're back for our monthly real estate market update and trench report for the Menifee, Murrieta, Temecula Valley. Median sales price is down in all 3 cities that I analyzed. Days on market are increasing, new listings have plummeted, and interest rates are back on the rise. I'll fill you in on why and more in this monthly market snapshot, but don't worry, it's not all doom and gloom. It's just December, and I'll give you my take here in the trenches. Hi, Jessica here with the Genung team and Real Broker. Thank you as always for stopping by my channel, and I'm gonna get right to it today. The Federal Reserve cut rates at the December meeting for the 3rd and final time this year. According to Investors Business Daily, the November employment report, which showed job gains stabilizing at a modest level and somewhat encouraging inflation reports last week, have sealed the deal for more interest rate relief. We did get the expected interest rate cut, but don't throw a party yet. The outlook for interest rate cuts in 2025 is pretty bearish at the moment. The article goes on to say the chance of a 4th straight rate cut looks slim. Markets currently see just 16% odds of a rate cut at the January meeting. The prediction is there will only be 2 rate cuts in 2025. The reason policymakers may decide to slow the pace of rate cuts is that their primary inflation gauge, the core PCE price index, ticked up to 2.8% in October, and progress towards the 2% inflation target appears to have stalled. It's that old inflation that continues to be a pain in our rear. After the Fed meeting on Wednesday, Jerome Powell made some remarks and did confirm they are only planning on doing 2 rate cuts in 2025. He had previously just said back in September they were going to be doing 4 cuts. So the market did not like this news. The Dow dropped that day over 1,100 points and the mortgage rates went in the wrong direction as well. In the morning before the Fed meeting, I checked the interest rates for this video that I'm making here, and the 30-year fixed rate mortgage was around 6.93%. After the Fed press conference later that same day, the rates went up to 7.13%, which is a pretty big one-day spike. That is a one-day increase of 20 basis points, which is almost as much as the cut that was announced. What the heck? This is actually not uncommon though, because as it relates to the Fed raising and lowering the federal funds rate, you want to buy the rumor and sell the fact, meaning these rate cuts are already priced in by the time they actually happen. So this rate cut was already priced in, but Jerome Powell in his speech basically took away 2 of the 4 rate cuts that were expected next year, and that's why the market reacted negatively. But that could always change, of course, because they are supposed to be data dependent, right? Okay, let's move on from the Fed news. Mortgage applications are a good leading indicator for real estate sales that I like to cover sometimes. At the end of September and all through October, mortgage applications were down fairly significantly, but pretty instantly the week of the election, the purchase applications bounced up and increased for the next several weeks. They are down slightly this week, but you know, it's Christmas. Let's chat briefly about the changes to realtor commissions. It's now been 4 full months since the official change in commission policy, although most realtors started implementing the changes before that, after the settlement procedures were announced. So are sellers still paying the buyer agent's commission? For the most part, yes, the buyers are writing buyer agent commission into the purchase contract and the sellers are usually still paying it. I've had some transactions where the fee is negotiated down a bit, but still within an acceptable range. There was some confusion about the settlement with the way that it was reported in the media. Some sellers thought they didn't have to pay the buyer agent anymore. Well, they never had to pay in the first place, and they still do not have to pay, but from what I'm seeing, most of them still are. But I want to talk about a change I have been seeing. Same as the sellers thinking all of the sellers are no longer going to be crediting the buyer broker fee, which is false. Many buyers thought the result of the lawsuit is now they have to pay their buyer agent out of pocket on any home they are interested in. And now more buyers are going directly to the listing agent and foregoing independent representation when many of these sellers would have in fact credited the fee to their agent. I think it's important to have independent and experienced representation consideration when buying property. So I was just talking about the buyer agent fee on resale homes, and let's chat briefly about the buyer agent fee on new construction homes. Every builder in our area is still paying the typical agent professional fee, with the exception of Lennar. Lennar changed their commission policy a couple years ago and is not paying agents in our area for the most part. There have been a few exceptions where they are offering to pay agents, but it's a little bit complicated over at Lennar lately, quite frankly. There have been countless changes to their commission structure over the years, and their attitude towards agents has been difficult lately. It is what it is. With all this said about how most sellers are still crediting the buyer broker fee so the buyer doesn't have to come out of pocket for their representation, I think that this spring will be very telling about how the commission changes will ultimately play out. If we get back to a lot of multiple offers on properties, will that drive the seller paid credits down or not? I've been in multiple offer situations recently and the seller was still crediting a typical amount, and I'm thankful for that. My prediction, which is just my opinion at this point in time, is that not much will change in the spring, especially because now that the Fed has taken away 2 of the 4 planned rate cuts, this leaves mortgage rates still quite elevated, which will likely be a drag on the spring selling season and not the usual gangbusters we see starting around March. I think the real estate market is just going to slug along in 2025, same as this year and same as last year. If rates stay elevated, which is the plan currently, sellers will still be reluctant to sell and the low supply of homes for sale will continue. If mortgage rates get into the 5s, that will be another story, and I would expect the market to pick up when that happens. That's how it's played out previously. 5% mortgage rates have been the magic number in my business, and that's when things really start to pick up. All right, let's get into the market stats. So as always, we're analyzing Menifee, Murrieta, and Temecula, those 3 cities, only single family homes to keep it simple. And we're gonna start with median sales price. As I mentioned in my intro, median sales price is down across all 3 cities, which is actually pretty rare. I'm not putting too much stock to it because this is just 1 month of data and it's December, so it's typical for sales volume and prices to come down in December. But what is kind of unusual is normally my numbers bounce around across all 3 cities. It's actually kind of unusual for all 3 cities to go in the same direction, and that for median sales price is down. So starting with Menifee, month over month, median sales price is down $7,500 or 1.3%, and year over year it's down $858. So we have a slight decrease in median sales price in Menifee year over year. That's the only city that's down over year. It's basically flat. It's under $1,000. Moving on to Murrieta. Murrieta's median sales price month over month is down $10,000 or 1.4%. So median sales price is $700,000. Nice even number for a single family home in Murrieta. And then year over year, we are up 9.4% or $60,000 in Murrieta, which is the largest gain of the 3 cities year over year. Temecula month over month has the largest decrease, which was 3.9% or $32,000, but we're still up year over year in Temecula, a little over $24,000 or 3.2%. Moving on to number of closed sales, starting with Menifee, month over month, there is an increase of 6 homes, 6 sales, or 5.3%, and year over year there is an increase of closed sales of 26 homes or 28%. Looking at Murrieta closed sales, Murrieta and Temecula also, but especially Murrieta, we're seeing what we would normally see seasonally down month over month, 7.3% or 7 homes, but we are up also in Murrieta year over year. We're up 18 homes or 25.4%. Temecula's is a little number of closed sales month over month is a little bit more than seasonal percentage wise. I would say at 20, it's down 27.7%. That's a decrease of 26 homes. And then year over year, Temecula is the only one that has a decrease in the number of closed sales of 17.1% or 14 homes. Median days on market is also kind of interesting, same as median sales price. It is, all the cities are going in the same direction, and that's they're all going up month over month and year over year, just a little bit. There's nothing, huge here, but all three cities trending in the same direction, again, is a little bit unusual. So starting with Menifee, month over month, it's taking 3 more days to sell a home, or 24 days in November, and year over year, it's taking 1 more day to sell a home. Murrieta, month over month, it's taking 8 more days to sell a home, and year over year, it's taking 5 more days. Temecula, month over month, it is taking 3 more days, or 22 days to sell your typical home on the median, and year over year, it's taking 9 more days. So days on market have been going up, and if you saw my last market report, this correlates with the stale listings that we've been seeing. There's more homes that have been on the market that are getting stale, more than 30 days, more than 60 days, which we haven't been seeing a whole lot of over the past few years. But homes, they're definitely taking a little bit longer to sell. But historically, and we'll get to months of inventory here soon, homes are still selling very quickly historically. Number of active listings. So month over month, all three cities are down. Year over year, we're up in inventory. So month over month, we expect these to decline. They normally decline in November, they decline in December. We'll still have low inventory in January, and then we start to pick up February, March. So this is all typically seasonally. But starting in Menifee, we've got a month over month decrease of active listings of 14 homes, or 3.9%. Year over year, we have an increase of active listings, 52 homes. So we have a healthy increase in Menifee of inventory year over year, or 17.7%. Month over month in Menifee, active listings are down 37 homes, or 11.4%. And year over year, our active listings are up 18%, which is 44 homes. Lastly, we're going to look at Temecula. Month over month, there are 34 fewer homes on the market, active listings, and year over year, there are 44 more active listings, or an increase of 18.5%. Number of new listings is kind of an interesting slide deck that I'm looking at here. Starting with Menifee. Again, what's going on in November? We had the election. Everybody was really nervous about what was going to happen with the election. People were not listing their homes, so we have very big decreases in new listings from October to November. So very big across all three cities. So Menifee, month over month, they had 63 fewer new listings, or a decrease in 34.8%. So that is the election effect, if you ask me. I mean, normally listings decrease between October and November, but not by this high of percentage and not across the board. Year over year, we're down 17 new listings, or 12.6% in Menifee. Very similar story in Murrieta. So it's month over month, Murrieta new listings are down 62 homes, or 41.9%. So that's a huge decrease. Again, the election effect. And year over year, it's actually up 2 homes. So we do have more listings this year versus last year, which is good because we're still very anemic on listings, but not like we were at the end of last year. That was a whole nother thing. New listings in Temecula, month over month, very similar to Menifee and Murrieta. Also, it's down 66 homes, or 45.8%. So new listings, again, plummeting month over month. And I'll get those December stats out to you to see if that continues. It probably will, although real estate activity in our business, and I'm hearing from other people, has right after the election, it really did start to tick up. So maybe we'll even see an increase in December of new listings. I actually wouldn't be surprised about that. Just the election effect, it just might not be your typical seasonal trend during election year. Year over year, it's down 11 new listings, or 12.4%. And then the last stat that I like to go over every month, this one was sort of interesting as well, that is months supply. So if there were no new listings that came to the market, how long would it take to sell every available listing in the MLS? How many months would it take? So very similar numbers across these 3 cities. So in Menifee, we have 2.8 months of supply. which is down from the high of supply. So in May of this year, 2024, we had 3 months of supply. So our months of supply is coming down. In Menifee and Murrieta, it's coming down as well. It's 2.9%, so very, very similar to Menifee. But this is coming down a little bit because over the prior 4 months, we were over 3 months of supply. So we were really starting to edge up in months of supply. Now it appears that we're trending back down, which again, it's December, it's seasonal. I don't make anything of it, but we'll see how the next few months play out. Temecula months of supply is the same as Murrieta. It's 2.9, and the prior 5 months were all over 3 months of supply. So months of supply is coming down across all 3 cities. So we'll see once we turn the new year how the real estate market looks. I am going to be having a forecast video coming out soon too. So keep an eye out for that 2025 forecast video. All right, we'll see you next week. Bye.